Hey friends, welcome to Why Did We Start This with Penny and Jonathan, a daily reset helping exhausted business owners stop guessing and build real financial systems so you can reclaim your paycheck, your time, and your business. Let's dive in.
Okay, so today I am going to ask. I found another. Um,
It's Tuesday. Are we
it
exhausted?
is Tuesday. Not exhausted, not yet. No,
Okay.
just getting started. No, but I found another uh, post on Reddit that I want to read for Penny. The title of this post is 29-year-old COO of a $16 million, which I don't know what he means by that, but a $16 million family business, profitable on paper, but cash flow negative, and now behind on rent. So the context is the 29-year-old COO of a logistics business started by his father 30 years ago is trying to save the company. They moved into a larger warehouse during COVID, raising rent from $29,000 to $100,000 a month. That's huge.
That was a big jump.
They lost
Okay.
a major client shortly after. The founder used to run personal expenses through the business during the good years and now refuses to sell personal assets to save it, despite the $300,000 behind on rent.
Okay, I agree to this one because I saw the headline. Now we're going to get into all kinds of family dynamics.
Yeah. So today we are doing. So
Okay.
one thing he said was today we are doing about 16 million in revenue, but only around 200K in net profit, 1 to 1.5% margins. We've been in a cash flow crunch for about 1.5 years now. At times, we've had to delay vendor payments just to make payroll.
Okay, that's a good one.
Yeah.
I want to break down a couple of things first before we get into like what I would say to do next.
Okay.
So let's take this situation. Number one, COO means Chief Operating Officer,
Yeah.
right? So basically, Dad started the company, put it in bad financial place, and then handed it to the son to run it. How many times have we watched this? How many times have we watched this play out with companies?
Right.
Personally,
Yeah.
like been
A lot.
a lot. This is not the kind of legacy we are to leave to our children when as business owners. And so first, let's talk about that. The son is clearly got control of the company, but not. Dad is still refusing to let him run it the way it needs to be run. So there's one problem. Somebody can't carry all of the responsibility and have none of the power.
Right.
Is power the word I want to use?
Yeah.
Okay. That's not fair. Number two, when they are talking about profitable on paper. Okay, so one of the things he said was today we're doing 16 million in revenue. So you said, I don't know what that means, but when he said we're a $16 million company, usually somebody's talking about
He is.
revenue at
He
that
said
point.
specifically
Okay.
we were doing 16 million in revenue.
But only around 200,000 in net profit. So most people's mind thinks, well, then they should have $200,000 in the bank if they have $200,000 of net profit. So I'm going to break this down a little bit as to where that comes from and the words that people are using and why net profit does not equal cash in the bank, even though our minds think that should equal cash in the bank. I think this one's an easy one, but I'm gonna give a few scenarios that may be the issue. So $200,000 in net profit comes from the profit and loss statement. So these are accounting terms. The profit and loss statement tells us what our income, our revenue, our income minus our expenses is.
Yeah.
What the profit and loss statement does not tell us is, number one, it does not tell us anything about debt payments. It should show our interest expense because things on the profit and loss statement are deductible tax expenses. But when you're repaying principal, that goes on the balance sheet. So we're going to say so we're going to pretend they have a $500,000 loan. They pay $1,000 a month. Well, only 200 of that is interest expense. So 200 of that goes on the profit and loss statement as an expense. 800 of that goes on the balance sheet, reducing the loan.
Hmm.
So when that guy's looking at the profit and loss statement, he says, we have $200,000 of net income. But do they really have that much net income when we're talking about cash flow? And so that's why when we're talking about cash flow, it's different than net income. Now, net income is the number one thing that we have to know about a business. And most people don't know it still. A lot of people, even in that situation, don't still know what their actual net income is. Okay. So that's number one. I'm going to guess that they have debt payments that they're paying, and it's eating up that $200,000.
Yeah. Well, I think what he's saying is like 200,000 isn't like, that's his struggle too. Like,
oh yeah, it's a very tiny margin
for $16 million
it's
revenue.
Surprising though, most businesses run a very small profit margin.
Yeah.
That's normal, and that's actually a good thing because then you're mitigating your tax liabilities. So. Yeah. It's not that dramatic as long as we know what that's doing to our cash flow.
As long
if
as
they
he's
had
able.
$200,000 in net income and he's getting paid and dad's getting paid and all the employees are happy and the suppliers are paid and everything's happy.
But they're not. They're $300,000 behind on their rent.
Okay.
That was one of the things he said.
Okay. Number two, here's the other reason why I think that they are in a cash flow crunch. And yet their profit and loss statement says they have $200,000 in net income. And he said it. And very few people pick up on this. Dad used the business to run personal expenses through. Okay. So when dad uses the business to run personal expenses through, that does not go on the profit and loss statement. That goes on the balance sheet. So it's not reflected in that $200,000. So let's pretend that dad decided to, which again is not uncommon, but it's absolutely the first step in being a grown-up business owner is stop doing that.
Yeah.
Stop running personal expenses through your business bank account. Separate them. And here's the reason why, because someday you're going to have a COO that is scratching his head and frustrated because how in the universe are they supposed to run a profitable business if you're screwing it on the back end?
Right.
And so a lot of times that's what's happening in businesses like this. We have a guy in charge, like a COO, and he knows what the expenses are. He knows what employees are paying. He knows all of that, but he doesn't know that the owner is taking money out the back door.
Yeah.
Because the owner has the right to. And
they justify it because maybe they're not paying themselves correctly. And so that's why a big part of what we say is, start paying yourself. Pay yourself correctly. Mm-hmm. Because he thinks, oh, well, I'm not getting what I should be getting paid, so I'm just going to use the company as my bank account, personal bank account. Yeah. And it's not stealing. It's his bank. Yeah. It's his business. It's not stealing, but it's dumb. Yeah. If you want to keep it open. So dad is taking money out the back door. He says during the good years and now refuses to, and I would venture to say, I've watched this. This is why I venture to say this. I've watched it go. I've watched it happen over and over and over. They do it during the good years and they do it during the bad years because it's already a habit. Yeah. Come on, let's be honest. If we have auto drafts set up for our personal expenses, are we going to change those? Yeah. No. Well, I think here's the son's upset. Like he said, now the dad refuses to sell personal assets. So he's used the business to buy personal assets, maybe cars, maybe expensive cars, boats, things like that. But now he refuses to sell them to help the business stay alive. Yeah. Yeah. And dad needs to. And the other thing is that they went from that was huge. My mind went, well, they went from renting a warehouse from $29,000 to $100,000 a month. That is a huge jump. That's a huge jump. Yeah. So maybe that was a mistake, and maybe it's time to look and say, like, okay, maybe we needed to do something smaller or negotiate with that landlord and change the terms of that lease. Definitely. So let's talk about this. Talk about a little bit more about, because we hear this all the time. And you explain it a little bit, but I want you to talk about it, dive in a little bit more. We hear this all the time. Profitable on paper. We hear people coming to us say, I'm profitable on paper, but I'm drowning. Like, I don't understand. Like, why does it say I'm profitable, but I don't feel like it? Yeah.
I would say 98% of those people are not even profitable on paper. Their books aren't right. They're not even actually looking at paper. What they think is profitable on paper is, well, it only cost me 30 cents to make this thing and I sold it for $1. So that means I must be profitable on paper because they know what it costs them to make money.
Yeah.
They don't know what their run rate is, though. They don't know what their monthly run rate, the expenses are for the month for their business to stay open. So that's number one. They don't actually know they're profitable on paper. They don't actually look at a paper. It's just one of those things we say. we don't actually look at a paper.
Yeah.
The statistics of business owners that are actually looking at that profit and loss statement on a monthly basis is staggering. The ones that are win at business, they do.
Yeah.
The other ones don't. They'll be closed in 5 years.
Yeah.
They're the statistics. Number two, they don't understand the relationship between a profit and loss and a balance sheet. Or they have an accountant that does not speak English to them, that gives them reports and expects them to understand that. And so they just don't understand that relationship. I've worked with business owners and organization leaders for years, and that is the number one thing that trips them up is at the bottom of that profit and loss statement. It says there's $200,000 in net income. Then Penny, why is there not $200,000 in our bank account? And so then I have to, and I don't know why. I mean, we could go back into the history of accounting and figure out why it's the double entry accounting. This is how it was set up. I didn't write the rules. It's how it's set up, and it's how we have the laws now. I mean, there's the generally accepted accounting practices. So
Right.
the GAAP rules require us to do accounting like this, and accounting really doesn't help business owners the way that it is.
Right.
So the way that we marry that is what's called cash flow forecasting or cash flow management. And in our practice, we've created a cash flow dashboard for our clients that marries the two, that marries a balance sheet with a profit and loss statement, so that business owners don't just have, number one, you have to be profitable. If a business is not profitable, for real profitable, then it can't stay open.
Right.
Something has to change. We can get some funding this month, but if we don't fix it, next month is going to be the same problem.
Right. Same, like the dad could sell all his assets and they could cover that $300,000, but
what happens next month?
But what happens next month? Yeah.
Right. So that's the number one thing. Like I would dig in and be like, are we actually profitable? That's number one. We have to get profitable. Absolutely. And you have to get profitable at the same time as covering the rent so that they don't, kick us out of the warehouse. Although it's a little harder to get kicked out of a $100,000 warehouse, but
yeah. But that's probably what they need to do. And it's hard to pivot at that point, I'm sure, but
yeah. But if you don't really know your numbers, you don't know if I need to, you don't know if I really need to change the warehouse we're in, or if we need to lay off staff, or
Right.
what do we need to do?
Right.
The very biggest problem, I think he mentioned it, is they're delaying vendor payments. And that's a really bad problem. This is a logistics company, so it took me a long time to figure out what logistics is, because don't we all use logistics in our business, like logistically speaking?
Right.
Logistics is like shipping and receiving.
Right.
But if you are delaying vendor payments, you will get cut off by suppliers, and then your business is dead.
Right.
And so we have to figure out how to pay vendors, pay those suppliers. We have to figure out how to get caught up on rent, and we have to figure out where our labor is at.
Right.
And are we really, really profitable? And then we have to, and all at the same time. And this is the trick of when people come to somebody, to an accountant or something, and be like, can you fix it? Well, we have to fix everything at the same time when they come in this kind of scenario, because number one, we have to fix a relationship. We have to fix a profit. We have to fix profit margin.
Yeah.
We have to fix cash flow. We have to fix all the vendor payments and the rent all at the same time, plus somehow salvage a son and father relationship. And I've said this more times than I can count. That business is really important to that family.
Yeah.
But don't lose a relationship with a family member. I would never, ever lose a relationship with a kid over a business.
Right.
I'll sell that business tomorrow.
Shut the business down.
I'll
Sell
shut
it.
that business down tomorrow.
Walk around.
I'll go
walk
work
away,
at
build
McDonald's.
something else.
Yep.
Yeah.
Yeah. It's not more important than my babies.
Right. True. So true. That's
Did that
good.
help?
That helps.
You
I think that
understand?
helps.
Did I explain how to connect the profit and loss to the balance sheet? It's not cut and dry.
I heard go talk to a professional. No.
Yeah. Yeah.
You really need to be able to see that cash flow dashboard is really what I heard. Like, see what's coming in, what's going out, and what you need to be profitable. And
Yeah.
you have to really take a hard look. Like, I think that's one of the things, like a hard look at how much we are spending. How do we get profitable? Like,
Yeah.
that's the only thing that's going to save this
Well,
company.
and with a logistics
Like, you
business,
can't-
you don't get paid on delivery. There's probably terms. And we talked about this in one of our other podcasts. There's terms both ways. So
Yeah.
they extend terms to their customers and they get terms from their suppliers.
Right.
And so you need to, and I'm working with a company right now. We just set up with our Profit OS, and I'm teaching that owner how to look at cash statements and how to look at accrual statements.
Yeah.
And that they're both important, especially when you get to 16 million. You need to be looking at cash and you need to be looking at accrual so that you know. And accrual financial statements is the only way to actually know if you're profitable. If you're looking at $16 million in revenue, if you're looking at purely cash basis statements, then you still don't know if you're profitable.
Yeah.
But that will tell you if there should be money in the bank.
Okay.
And a good accountant can trace, should there be money in the bank? And if there's not, somebody's stealing it.
That's also we got to talk about that sometime. Fraud.
Not today.
Because we don't have time today, but fraud is another great thing that proper accounting can prevent. So, all right. Well, thank you guys for joining us. We want to build a community here. Join us live every day or reach out, direct message Penny on Facebook, LinkedIn, or Instagram. So we answered a question today from Reddit, but we would love to answer questions from you. So please post a question in the comments or post a question or DM Penny directly. I mean, we'd love to hear from you and answer your question. Hey, join us tomorrow. Thank you.
Bye.